Happy April 1st, ladies and gentlemen, Allincrypto here, and welcome back, guys, for what is going to be another jam-packed daily cryptocurrency market update. And no, we are not selling all of our cryptocurrency. It is April Fool's Day today, and we thought we'd play a little bit of a trick on you guys in the title, maybe get some people's hearts racing. You guys will know very much where we are in regards to the cryptocurrency market and our view on it, and the opinion that we have in regards to it doing very, very well. And actually what we're going to do in this video is talk about the game being up for fiat systems. Now, we have given a number of different angles in regards to why we're bullish on the cryptocurrency market. And one of those angles is derived from the kind of macroeconomic environment, which we think is actually an inflationary one, but more inflationary of the fiat systems than anything. And when you have record debt issuance, we see the same kind of treasury issuance, and we're going to talk about all this in this video and what gold's doing and how all this relates to crypto. We see the same kind of treasury issuance last year that we saw actually during the kind of 2020 years, when we were in, of course, a kind of very strange situation. Let's just put it that way. So one reason we're very bullish on the cryptocurrency space is due to this kind of macroeconomic perspective that actually, if you look at global liquidity, if you look at technically what we're looking at, if you look at who's going to be buying the bond market and where that liquidity is going to come from, and we think it's the Fed, it paints a very bullish picture for risk generally. I think we're going to start the video off talking about gold. Then we're going to be talking about kind of what's going on with the system, and then relating that all to Bitcoin and the cryptocurrency market to help give us this really bullish narrative or understanding of where we think markets are going. And then we're going to kind of close things off by looking at some of the CFTC, which is the commodities basically regulator in the United States, actually clapping back at the SEC in regards to the recent KuCoin case. So lots of interesting things to get into. Let's start off with, of course, addressing what it is we are talking about and what is the game that we're talking about that is up. Now, this was an article from CNBC this morning. It says gold prices hit another record high on Fed cut expectations. Gold prices extend its rally to notch another record high on Monday, propelled by US interest rate cut expectations and its appeal as a safe haven asset. Market watchers are expecting the US Federal Reserve to cut rates in May or June. Now, I don't think that gold is going up in regards to the cutting of rates. I believe gold is going up, and it's going to be the same driver that's going to see the global liquidity cycle play out and risk do well in the coming years as a result of the debt issuance that is currently taking place in the United States, and thus the proliferation of the fiat systems. Remember, you're looking at gold against the US dollar. What has gold gone on to do? Well, it's gone on to put in a high against the US dollar. And gold is a chart that we are actually very bullish on. There's a number of technical patterns that we're identifying. You have a cup and handle. You also have a bull flag in here. And on top of that, if we drop down the time frames, you actually have an inverse head and shoulders that takes gold to about 2,500. And you can see since we've drawn all this, it's kind of progressed very well. So we will relate all this to crypto. Gold is in that kind of more broad risk category. And you can see gold doing well because it's sensing what's coming in regards to liquidity, which we've actually said the bond market, the TLT, is giving us signs that it's going to do well, that it's coming out of its downtrend now. It's going to take a little bit of time to play out. We've seen record volume. We've got that bullish divergence. This is indicating that liquidity is coming for the markets because bonds are going to get a bid. Who's going to be behind that? There's going to have to be liquidity for that to be the case. And the interesting thing here is, well, that's going to propel risk to more of a degree. So we are going to relate all this to crypto. We're kind of going all over the place right now, but do bear with me. So gold putting in a new all-time high because it's sensing what's to come. There's a reason that all these assets look bullish. Why Bitcoin or crypto more broadly, remember we'll look at total turn, a number of things, precious metals and stocks, even bonds now are looking good. Even housing is actually starting to really pick up. It's because of what's coming. Remember, markets are forward-looking. Why do you think we saw such a strong bid in regards to MicroStrategy? Because they are essentially a bet on Bitcoin's future price. So we're very bullish on gold. We think there's a lot of liquidity coming. Let's talk about where that liquidity is coming from. First of all, let me just show you the Global Liquidity Index, which aligns with technically what we're looking at. So this is the global liquidity. This is from Real Vision. You've also got ISM cycles and lots of cycles overlap, but this is global liquidity, and this is predicting that 2024, 2025 is actually going to be quite good. And you can see just how well this is actually followed, and who's going to be the propellant of that liquidity. Well, it's going to be the same people that are going to step in and buy the bond markets at a time when bonds are being proliferated unbelievably, and they're about to lower interest rates. That's not going to be retail that steps in, okay? It might be inadvertently banks through some sort of indirect central bank stimulus, but we already have confirmation, and this is why I think we're getting these signals on the bond market, that the Fed is going to stop QT, and their form of QT is letting bonds roll over, so not renewing them. It's not getting rid of them, it's just not renewing them. And actually, the next step that they go on to is, well, we have to support the bond market and go back because we've achieved this miracle soft landing into actually stimulating markets. And this is what sees global liquidity go up, which aligns with technically what we're looking at for gold, for the stock market. You know, Amazon's one of those stocks that everyone was very much against me on, and we can see just how well that's actually progressed from what we were looking at. But let's talk about what's kind of going on with the system. So this is a chart. Now, this is interest payment scenarios. This is US interest payments in the billions of dollars, okay? So you can see billions on the left. Of course, it's a graph. I'm sure everyone knows how graphs works. This is US Treasury interest payment, 12-month cumulative. This is projection, assuming rates stable, okay? And this is projection, assuming a 150 basis point rate cut. So this is interest payments on the debt that we already have. This is, of course, from Bilargi. He then goes on to say, the rate of increase is up roughly 15x. You can see the kind of where this is heading, and you can see just what's taking place. You know, this is federal government current expenditure on interest payments alone. So it's spiraling. At what point does QT become QE? Because of the burden that you're putting on everything. Now, we spoke about actually what was going to take place. We actually looked at 2023, Larry Fink's comments in regards to no landing in 2024, and we agreed with him. We said, with all the stimulus coming, it's very unlikely. So this is issuance of US treasuries are now at pandemic levels. We saw nearly $7 trillion in gross issuance of treasuries in just 3 months during 2023. Okay, we saw 1.2 trillion back in March, a couple of weeks ago, overnight, because of this new bill. So US federal debt is rising by 1 trillion every 90 days. It was 100 a few days ago. US government spending as a percentage of GDP is at World War II levels. Wire treasury issuance and deficits at record levels if we are on track for a soft landing. So you can see the writer's bias coming through here. We have achieved essentially a soft landing, by the way, ladies and gentlemen. As it sits, doesn't mean there's not a crash, and we do think there is going to be one. And that's all going to align with global liquidity and things like this. We could go really deep on all this, and I tend to do so in my Patreons. The last thing I want to show you, because why the hell does all this relate to, you're going to be saying, all in crypto, why are we talking about gold? Why are we talking about the macro situation? Because it's a stimulatory situation that's taking place that aligns with global liquidity and what we think global liquidity is going to do, that aligns with technically what we're looking at for Bitcoin with the targets we've got, what we've got for total 2 going to $3.7 trillion. It's the macro backdrop that supports technically what we're looking at. And when you paint a picture, or when you put together a puzzle and you can see the picture very clearly, you go with that. And this is part of being an investor and understanding the markets in more of an in-depth level than just following news headlines. So issuing more T-bills at an accelerated pace is a precondition to becoming a banana republic. This is what gold sniffing, this is what Bitcoin sniffing. Bitcoin is going to be the best performing, I'm going to relate all this to Bitcoin in just a second, asset in this proliferation game, which we're going to accelerate this year, and we're already seeing that, and likely going into 2025. So this is the type of thing you see emerging markets do, not the issue of the world reserve currency and neutral reserve assets. If you believe that the Fed's preliminary goal is smoothing market functionality for the UST market, rather than their dual mandate of maximizing employment and price stability, you can begin to understand why Powell is so keen on starting a rate cut cycle soon, despite the fact that data we are seeing suggests current monetary policy is not restrictive enough to return inflation to 2%. Inflation's kind of bobbing its head a little bit back up, and it's natural for it to be doing that given the stimulus that we're seeing, inflation works in kind of hordes, in stages, and commodity inflation is something that I can actually see inflation coming back up, but they're in a very sticky situation. Maybe we just tolerate a slightly higher inflation rate. And CPI this month is going to be interesting, but we can talk about that when we get close to it. So in a fiscal dominance regime, the central bank is forced to lower rates to help fund the government deficit. Given the dysfunction in DC, where both tax increases and spending cuts are off the table, as CBO projects 5 to 7% deficits for the next couple of decades. The only real lever to pull is lowering interest rates on government borrowing as the government continues to shift borrowing to the front end. Yep, it seems like gold is already starting to sniff this this dynamic, as cutting of interest rates to support government borrowing will lead to currency weakening and higher inflation. So not only are they going to be cutting rates, in our assessment, they're going to be stepping back into the markets. And we think TLT, I don't even see macroeconomists talking about this. We don't see anybody else saying, okay, at this point down here, we're turning bullish on the bond market. We weren't in the ding-dong buy bond where diamonds, la land individuals that have never got a call right, by the way, that are now all super hung up on crypto. But we're now bullish on this. So the question is, where does the liquidity, where does the bid come from? Well, it's going to be coming from the Fed, because they are the buyer of last resort of this. This is the system. We've seen their willingness to step in with Silicon Valley Bank and what took place in the gilts market. It has to be, okay? And I think that they can avert a crash until they probably put the right person in power. Maybe they get Trump in to crash it on him to say, you naughty, right wingers, or whatever they decide to do. Who knows how this goes? But this all filters through because this is a very supportive inflationary environment where you see continued proliferation, the Fed adding to its balance sheet, and all the same drivers that saw markets do really well in 2020 and 2021. This environment is going to see risk do well. And actually, if we look at Bitcoin against the SPY, this has been a beautiful chart for us since down here. It's in an uptrend, and we think the SPY is going up, so Bitcoin's going to be outperforming. It's in an uptrend against the NASDAQ. It's also in an uptrend against gold, which is doing very well today. And on Bitcoin's own technical merit, we think it's going to 151,000. And on top of that, when we look at the total turn, we still don't see anybody doing analysis on the total too. We think this sucker is heading to $3.7 trillion. It's currently at 1.1. So a bit more, we're starting the month off aggressively. A bit more of an in-depth guide into why we're bullish on the markets. I don't think there's anybody right now out there delivering such a comprehensive kind of, in the space of 12 minutes, view on their macro reasoning for being bullish. We've spoken about a lot of things, a lot of correlating data. The last thing I kind of want to talk about, of course, you had a lot of KuCoin news that came out last week. The SEC and the US being the biggest bully in the room, as always. They are the biggest bully in the room. They are the biggest, a number of things that I don't want to say publicly, although I would love to. And that isn't a dig at any of my brothers and sisters, fellow human beings that are citizens of the United States. I love American people. In fact, I deal predominantly with people in America, but the government, different story and different view on them. But CFTC Commissioner Palm says KuCoin complaint undermines the SEC. The FTC's complaint classifies KuCoin's leveraged tokens as digital asset commodity derivatives. Very interesting. Days after the Commodity Futures Trading Commission announced its civil lawsuit against crypto exchange KuCoin, one commissioner is questioning whether the agency is overstepping. Commissioner Caroline Palm, in a statement Friday, criticized the aggressive enforcement action, saying the complaint misrepresents what can be classified as leverage trading and is therefore under the CFTC's purview. The complaint filed Tuesday classified KuCoin's leverage tokens, which represent shares in funds controlled by the exchange, as digital asset commodity derivatives. So there's a real battle going on between the SEC and the CFTC. Of course, there's going to be funding that's going to be related to this industry, and that is likely why. But that is really all I've got for you guys. Quite a broad one. I wanted to focus on the kind of macroeconomic environment that I believe we're in, what the propellants of it are going to be, why we're going to see that liquidity cycle play out, and why that aligns with technically what we're looking at with Bitcoin, stocks, gold, so on and so forth. And the fact that crypto is going to be the best performing, it's going to be the first or the furthest person away out of that exploding building. And then also just to cover a little bit of news on KuCoin. That's really all I've got for you guys. If you've enjoyed the content, like, appreciate it, so a comment. I look forward to seeing you all in the next one. Thanks a lot for watching. Happy April 1st. I hope I didn't give anybody a bit of a heart attack with the title. And on that note, I'm going to love and leave you. Thanks a lot for watching. See you in the next one.